Gather round. It's time for your Real Estate Chalk Talk with the Hittner Group. Listen closely as your coaches discuss the culture, the economy, and the political scene, and how it affects your home and your real estate investments. Real Estate Chalk Talk is where you learn the science of buying and selling real estate and the art of living in your home. Your education begins in 5, 4, 3, 2, 1.
Hey there, welcome to the program. This is your Real Estate Chalk Talk with the Hittner Group, hittnergroup.com, 612-627-8000. That's 612-627-8000. Give us a ring-a-ling-a-ling. Be happy to have a chat with you about your real estate needs and the upcoming 2026 season. And that first conversation, of course, with no cost and absolutely no obligation. Okay, I just got to tell you.
What do you got?
You know, I love my lovely Americanos, right? It's a trademark cup of coffee in my hand at all times. I've been putting cinnamon in my coffee.
Cinnamon.
Sprinkle a little cinnamon in there.
Is that good for the digestive system?
I don't know, but it tastes good. It's just tasty.
What happened that you went, I'm going to do this today?
I just figured, you know, I tasted it in my head, and I thought, I wonder if it tastes that good in real life.
And sure enough.
And it does. Very
Great.
good. Just a little sprinkle of cinnamon in there, and zoom. You know, we have a beverage at the church that we have that's like a mocha deal with some cinnamon. You put a little cinnamon sprinkle on top, and I thought, well, why wouldn't that be okay just in plain coffee? And then you put a little heavy whipping cream in there. Mm-hmm.
That's it.
Yep,
Nice.
home run. Okay, kids. Time for
Home run, he says.
Time for the numbers. This is interesting. The number of properties doing price reductions is going full speed ahead. Today, the 7-day rolling average, the number of properties doing a price reduction in the last 7 days, 1,128. That's 14% of the active listings in the last 7 days.
Trying to get them to move.
Down a price reduction.
Winter is a coming.
Winter's a coming.
It's not even fall yet.
No.
It's not. I know. It's crazy.
Fall's in the air, though. Got to get it off
Isn't
the street.
It?
Yep.
Wait, it is fall. Is it October?
It is October.
Oh, yeah.
Is that a Keith Hittner shirt you got on there? KH, I like that. Okay.
Or a golf course. But.
So, yes, fall. It is fall. Winter's coming. People want to move some properties. We got like 2 months. Let's get them sold. Get them all sold.
We got the up-to-date, year-to-date closing in units kind of dialed in now. So closed units, this is through September, first 3 quarters of the year, first 9 months of the year. 1.6 ahead of 2024. So we've closed 29,570 units in 25 and 29,111 or 29,111 units closed in 24. 1.6. Little increase, better than the decrease. The contract ratio, this is an interesting thing here. The contract ratio. What that is the number of active listings versus the number of pended listings. It's at 39.3%, the lowest number in 10 years. All right.
Walk through that.
The active listings that we have right now is 8,128.
So that's out a little bit.
All right. And we have 3,198 pendings. So you take the pendings.
Got it.
Okay, divided by the actives, and that gives us a ratio of 39.3%. Here's what's interesting about it. So go back 10 years. We say it's the highest in 10 years. Well, what was it 10 years ago? 10 years ago it was 32.8%. But listen to this. We have 5,524 more active listings back then than we do now. There was 13,652 active listings on the market 10 years ago. Today there's 8,128. I'll repeat that. 10 years ago we had 13,652 active listings. Today we have 8,128. So we say with that, you look at the ratio, you look at that pending ratio, and you think, oh, it must be a buyer's market. Must be a buyer's market because you've got slowing activity. More properties on the market, less pendings, a slowing market. But we technically have a seller's market still. in most price ranges, right? But back then, because of the foreclosure process that was going on, it was a buyer's market.
Yeah,
So many.
I mean, we're getting there.
I think we're getting there too. I think it's
Especially for timing of the year when you're
Yeah.
comparing, right now moving into the winter versus, April going to July.
yeah.
I think the transactions they're going a little bit different. They're going in the way of the buyer a little bit more. If you look at builders and what they're doing, I mean, they're incentivizing pretty
And
heavily.
they're usually ahead of the curve.
Yep.
On their research and what
Yeah,
their numbers
they've
are
been
saying.
doing that, I think, over the last month or 3
Yeah, well,
to get some inventory moved. They're
Yep.
long on some land, and they're building away. So they want to move some properties for their investors.
I just did some local stuff, hyper local stuff on 3 zip codes. I did 55044 Lakeville because we talked about it last week, 55057 in Northfield because we got a property coming on the market down there, and I was curious about that, and 55118 in West St. Paul because I love West St. Paul, and we have a property coming on the market in West St. Paul. In Lakeville, there the median list price is $574,000. And the median days on market is 37 days on the market for that price point, for the median sale price. So the absorption rate in Dakota County is 2.3 months. 2.3 months. The takeaway is that the market is still active, but rate-sensitive buyers are pressing back and taking price reductions, asking for concessions, and doing that kind of stuff. The market that is still pretty robust, anything between under 400 is still lightning fast. And surprisingly enough, from 800 to $1 million is a pretty good market as well.
Really?
Mm-hmm. That market.
Why do you think that is? Because they're not sensitive to interest rates because they have large down payments in that range, in that price range, or they obviously have the financial resource to buy an $800 to $1 million home, so it doesn't matter as much? Or
I think a lot of the people moving out of those 300 to 400, mid 400s homes are looking in that price point too.
Mm-hmm.
So you do have some demand on both of those price categories.
I think you're right. And yes, to Kelvin's point, that buyer's a little more sophisticated financially, I think, and they have the resources, number one. Number two, they understand that when rates come down, they'll refi. And so that whatever interest rate they lock into, and they probably have large down payments so that they're not as payment sensitive, but they understand that they'll just refinance, and it's a temporary situation. They took out a 30-year mortgage. They have no intention of keeping that mortgage for 30 years. That mortgage is going to be gone and either repaid off or replaced by another one. Northfield, here's interesting. Northfield median sale price is down 10.7% year over year. 10.7%. That's amazing to me. 88 homes on the market right now. So we have a zip code down there that is definitely not keeping pace with nationally. So we'll just do one more here, and that is Mendota Heights, West St. Paul, 55118. That zip code has larger homes coming on the market, very fast days on market in that zip code.
Is what?
On 55118. So it's got larger homes, longer days on market for the longer homes. Strong presentation and price discipline is required in that market. Correcting on those larger homes in that market. It's always I'm just talking about the higher price homes that are coming on. There seems to be a large percentage of the share of homes that are coming on. I think that's influenced by Mendota.
For sure.
Mendota. But the smaller houses, again, that you'll find in West St. Paul are flying off the shelf. They just don't last. They're on there for a week or two and they're gone. Days on market. Okay, so now let's talk about the numbers themselves. 8,128 homes on the market. Last week it was 8,097, so we're up 31 houses. Not much. New pending sales. 758, down from 829 last week.
Wow.
So we're definitely
In
down.
the previous week, you have that or no?
Yeah, down 8%. 829 the previous week. 758 this week, down 8.6% this week.
Yep.
Another conclusion is that we're coming into, and I forgot to bring that piece of paper with me, but this next couple weeks here of October is probably the best fall week of the year.
What do you mean by that?
Just in terms of activity.
Okay.
So you have those people who are looking to get into it. The rest of October here is pretty good from an activity standpoint, and then we're gonna.
Well, you have time yet this year if you want to give us a call, 612-627-8000. That number again is 612-627-8000. We can get your house on the market the next week and get it sold before the end of the year for sure. Log on to our website, hittnergroup.com, Hittner group.com.
Hey there, welcome back to the program. This is your Real Estate Chalk Talk with the Hittner Group, hittnergroup.com, 612-627-8000. That's 612-627-8000. Give us a ring-a-ling-a-ling. We'd be happy to have a chat with you. Sit down, have a cup of coffee if you'd like. Put a little cinnamon in it, and we can talk about your real estate needs.
All right, I have a question for you, Keith. So in my previous life was in the insurance investment world.
Okay.
So I just want to ask you guys real quick how the different parts of the market are doing since the beginning of January. So just touch on the market and what area of the market is doing better. S&P. So here are your choices.
Okay.
S&P 500, NASDAQ 100, Dow Jones, Russell 2000, International, Bitcoin, Ethereum, gold, or silver. So I'm curious what you think since the first of the year. What market segment do you think is doing the best? And we'll go through the returns that each of these divisions have
S&P or Bitcoin, or Bitcoin.
Okay.
I'd say the same thing.
Would you? Shockingly, silver up 60% from January 1st.
Precious metals.
Silver number one, 60.6% increase in value.
Guess why? Data centers.
Safety.
Data centers.
Oh, I wonder. Yeah, probably.
Mm-hmm.
Number one. Number two, gold up 46.55%.
Yeah, inflation hedge.
From the beginning of the year. And then you're into your Bitcoin, Ethereum, and Bitcoin up 35% and
Ethereum.
30%. Ethereum, sorry.
Ethereum.
The problem with Bitcoin, although the crypto world, I don't know much of it. I put some money into it, but not much. But it's so volatile.
Yeah.
Right. So like, hey, it's up 30, but tomorrow it doesn't go down a little. It could go down to, you know what I mean? So
yeah.
It's dramatic. So you got to, I think, manage that pretty well if you're going to play.
Yeah, or you got into it a long time ago and it doesn't really matter.
Yeah. That's true too. So then you get into what are the different markets, right? S&P 500, NASDAQ, Dow Jones. So S&P 500, largest 500 U.S. stocks, up 14% year to date. NASDAQ 100, the 100 tech-heavy stocks, up 18%. Dow Jones, 30 established companies, just the steady eddies, up 10%, 10.3. Russell 2000, so the 2,000 smallest U.S. stocks, up 11.14%. And then international, which is 8,600 non-U.S. stocks, up 26%. So it seems like when you look at that market, and it was interesting when I was talking to my guy that I do stuff with. I mean, we went a little heavier international at the beginning of the year. I'm just like, these
You're
guys
smart.
kind of know.
Gosh, just smart.
I'm not smart at all. I'm okay, right? I'm always okay. But international, 26%, and then it goes to tech companies. So 26% international tech companies. Then it's just the large S&P 500, so large cap, right? And then your small cap, and then your kind of your steady eddies, right?
Yeah.
So pretty interesting what's happening in the market.
So there's something to be said for just investing in mutual funds that track or have
mirror
stocks in those indices.
Yep.
Right, as opposed to individually picking stocks.
Yep.
Mm-hmm.
Yeah, you can do spiders, right?
Yep.
Spiders are
Correct.
basically, I do a S&P 500 spider, which means it just tracks the S&P.
Mm-hmm.
It doesn't buy, like exactly what you're saying. So,
Yep.
So, and that's one of my good friends, lived with him in college. He's retired, my age, really smart guy, was a portfolio manager. All of his life, like, so what are you doing? Where are you going? Yeah, I just buy spiders. Because one, he couldn't because he was a portfolio manager. So he's like, too much conflict of interest. So I just buy, like, I'm buying this indice. You know, I'm buying this. You know, so it's
Right.
like, and you can do spiders all the way into just oil or gas or
Right.
this or that. You know,
Heavy
but-
metals.
Yeah, whatever you do. So just kind of interesting to kind of see what's the market doing right now. When you overlay that with where rates coming down a little bit, the housing market used to be real estate. Hey, number one. Now I feel like it's kind of like it's a good part of your portfolio,
Right.
but it's not number one right now. But I don't buy silver and gold. Do you guys buy silver and
No.
gold?
I
Do you
do
any
have
of that?
Well,
So,
I
yeah.
actually buy
Yep.
mining companies
Okay.
and companies that supply silver and gold mining.
Oh, really?
Yeah.
Okay. So just kind of interesting. So I thought that was kind of interesting just to give people an idea of what's the market done so far this year. So
I think same thing. We were talking about real estate in younger kids.
Yep.
Or young adults rather.
Mhm.
So when you're in your early 20s and you're looking for somewhere to live, what I always thought was the best is to buy something, and then maybe you're the one individual or there's a couple individuals in your friend group that have a decent income, steady job, and are able to purchase something, and then you rent a couple rooms to your buddies.
Mm-hmm.
So instead of going off and renting an apartment together, somebody buys one. And whoever that somebody is the smartest guy in the group.
Right.
And so you can still have your kind of lifestyle where you're living with friends and hanging out and you're partying a little bit, but you're taking care of your business still, and they're helping pay for your stuff.
Right.
There's usually, you know who they are in your group. There's
Yeah.
usually one or two or four of them if you got a big group of guys, and that's huge. And then another one is starting to invest at that time.
Little bit. Anything.
Just a little bit, anything you can do.
Mm-hmm.
Because time value of money is huge.
Yep.
And it applies to real estate and your investment markets.
Right.
You start getting involved in some of these mutual funds that in indices like S&P, Dow, and NASDAQ when you're in your early 20s. And if you can, do it. If it's $100 a month, if it's $50 a month, if it's $500 a year, if you can't stomach a monthly thing, just start.
Yeah.
Just start and learn about it. A lot of guys and gals that are in their early 20s don't know about it. It's not something that they're necessarily taught in school.
Right.
And it's important stuff that will have you in a completely different position in your life when you're in your late 30s. I think it's super important.
And I
for
think that the point that you just
young
made there
adults
is
to do
so
that.
important, because the impact will be in your late 30s
right.
or mid 30s, not when you're 70 or 65. People think I'm saving for retirement. No. You are investing so that you are in a good position when you're midstream,
Right.
when your kids are in most need.
There's a
and
level
all
of comfort and confidence that comes with being financial in a good financial position.
Yep.
And it comes from making good decisions in your 20s. I'm not shitting you. It's real.
It's actually very true. Well, even when you're talking about buying that first home for these kids and doing it, we have a DSCR loan, right? It's a debt service coverage loan, where all you need to do is show that the rents you're going to receive will cover the payment.
Mm-hmm.
Don't have to qualify with income. Don't have to qualify with anything. It's an asset-based loan.
That asset has to pay for itself.
Got to pay for itself. Pretty smart. So that's a way that they could do it as well if they don't want to hook mom or dad or somebody else on that thing, out of the gate.
Very tough at today's prices, but
Yep. Yeah. So kind of a just a.
But it doesn't
an
have to be.
outlet
The thing
there.
is, it doesn't have to be pretty.
no.
Right.
It doesn't have to be pretty. It's just your first one.
And that's the point that
That's
you made.
really
You
good
look at
point,
what you're
actually.
paying for rent.
Yeah.
And if you're paying $2,100 a month for rent in one of these apartment buildings someplace, you can go out and buy something for $2,100 a month.
Yep.
You know what I'm saying?
Yep.
And you don't, usually what happens is people go out and then when they look to buy something, what they're looking to buy is much better and larger than what they're living in and paying rent for. And they say, well, I can't afford it. Well, no kidding, because you just doubled your square footage and all of that. So, of course, it costs more. Buy what your payment is.
Well,
and
there's a
you'll
lot
get
of
into
very nice
something.
apartment complexes that are being built, and if you're spending that kind of money, you can get a very nice place actually, and it's going to have amenities, whether it's a gym or basketball court and pools and little restaurant close by and all that stuff. So the fact of the matter is you might not get as much, and it might not be as nice, but you're doing something different for yourself.
Well, you're
long-term.
owning it as opposed to paying for some
Yeah, and
investment
it's
pool.
not your forever place. I mean,
Right.
people overthink it.
Mm-hmm.
Right?
They totally
Totally get-
they'll overthink it, and they'll overthink themselves right out of making a decision.
Yeah.
And you just got to pull the trigger.
So $200,000 property, just read the numbers here. You have a payment with principal, interest, taxes, homeowners insurance, mortgage insurance, $1,910.
An FHA deal that you're getting 5-point-some-odd%.
Yep.
You know, high fives. That's not bad.
Not
to
bad.
stomach. You live in it 2 to 5 years. Hopefully, you can rent that property, and you're making more money now. You've built some equity. You can go buy another place, hang on to that one, or sell it. Take the money out and go buy now a different single-family home. And the goal is, you know, you're doing all this stuff before you're starting a family, before, you know, you're getting really ingrained in your locations, because it doesn't matter now. You can live here, there, or anywhere, and you're not worried about the kids' schools. You're just trying to gain some assets that help you build your wealth long term.
Yep.
And
Just-
are there properties for
just do
$200,000? Oh, there are no properties for $200,000. Yes, there are. You know, this 1100 College down in Northfield, $230,000, and it is a nice little house.
Right.
You know, it's in Northfield.
Yep.
So if you work in the southern Twin Cities anywhere, it's a 20-minute commute. I mean, it's really convenient.
That's it for this segment with Real Estate Chalk Talk. Log on to our website, hittnergroup.com, HITTNER group.com. Or you can give us a call anytime on the phone, 612-627-8000. That number again is 612-627-8000. And we'll be right back.
But we're going to wrap.
Money in the bank.
Rates are good. Pretty exciting.
You know why? Why?
Free money. You understand what I'm saying?
Hey, welcome back to the program. This is your Real Estate Chalk Talk, the money segment of the program. Kelvin Kamick, ladies and gentlemen, 612-627-8000 is our phone number. 651-231-2500 is Kelvin's number. Give him a ring-a-ling-a-ling. He'll chat with you about the rates, great rates and the low prices, although they're kind of snuck up a little bit again.
They did sneak up a little bit again. But the trend, I was just reading the headlines. It says the trend is your friend.
Mm-hmm.
Trend is your friend.
The trend is your friend. So just saying, hey, all the indications just moving this way a little bit. The trend of the market is positive. Rates are running about 6.38 is national average. So you're 6.25, 6.5. You're in that range right now. Can be higher, can be a little bit lower. FHA, depending what you're doing. Jumbo, some, we got a lot of different products, obviously, but the trend is going the right way. If you look at some of the other headlines from this past week, mortgage rates remain steady. Some selling pressure after the auction, new Fed minutes, but everything's pretty stagnant, right? Just kind of, we're just moving along. So, so the question I had to start this off the same, because I just wanted to hit on a couple things, is my youngest son has him and a couple buddies, and they get together once a week and talk about different business ideas. So they're going to do this packaging thing, and they're going to do this. They're always at the house chatting, and we are sitting, and they'll go, "Hey, Mr. K, so here's what we're thinking. Let's." They want to pitch it, right?
Spitball it, yeah.
Yep. So I love it.
I do.
love
It sounds like
right?
it'd be great.
And so I poke holes on stuff. But we were talking, and they said, Mr. K, I don't think we'll ever be able to buy a home because it's so expensive. And when you look at an average first-time home buyer program, there's not a lot. There's some in the 200s, but not a lot. There's some of the 300s, and now you're looking at a payment, though, of high 2s, 3. You know, it's like, dang. And these aren't great properties, and your payment's still $2,500 to $30, in there, because they have no money. They have no money saved. The price of everything's gone up. Their incomes aren't going up at the pace of everything else, right? So.
And these are 20-year-old kids, right?
20-year-old kids, low 20s, right? So it's interesting. I just wanted to ask you guys, do you feel like there'll be a housing correction? There's an article I read on housing correction coming. I was talking to a guy that does a lot of stuff nationally. Like, it's come, like, I'm pulling money right now. I'm putting money on the sideline. The housing market is going to correct dramatically in 26. Went through all this stuff, and it gave me all the reasons, around it. And I'm like, okay, I don't see it. I see a flattening. I don't see appreciation, but I don't see depreciation of home values. What do you guys think for our market? And I know because it's local, right?
Yeah, it is all local. Well,
I'd be curious what your thoughts are as we go. And how would you talk to these young people who are going, we'll never be able to buy a home?
Oh, I don't believe that that's true. First of all, I think that home prices are not the total cost of home ownership. So when you look at buying a home, buying the home is one thing. Keeping it and keeping it in a good state of repair is something else. So when you talk about home values, it's really insurance, taxes, fuel costs, energy costs, all of that comes along with it. And people blame it all on home prices. Well, it isn't home prices. It's yes, of course it is. Home prices have come up dramatically in the last 10 years, no question about it. But interest rates have doubled in the last 5 years. Insurance costs have gone up 40% in the last 5 years. Energy costs have gone up dramatically in the last 5 years. All those costs associated with have gone up in the last 5 years. And I've said this many times. I sound like an old fart, but when I was first married, and Keith was running around in diapers, we drove old beat up used cars. We didn't have satellite TV and online gaming portals and cell phones and all that stuff that we were paying a monthly for. We weren't buying meals on DoorDash and having it delivered to the house. We didn't have all that. So they've, in many cases, disposable discretionary income has been diverted to other areas.
Right. And when you say that, it falls on deaf ears.
Yeah.
Because you're 72 years old.
Right.
I'm 46. I bought my first house when I was 21 years old.
Yep.
I bought frozen chicken, broccoli, and brown rice. And that's what I ate. I rarely ate out. I spent money on going out, but I'm also have never been involved in gaming. And I had a cell phone at the time. And I had a motorcycle and a truck, and I had things that I liked, but there's a limit to it,
right?
And what I could have, and it was all cash based. I bought bikes with cash. I bought trucks with cash. If I couldn't afford it, I didn't buy it. It's just a different mindset that you have to get yourself into. So for these kids that are in their early 20s, and they're paying for premium Spotify, and they're paying for their online gaming thing, all that stuff is a waste of your time. If you really want to build wealth, you have to start somewhere. So how much does rent cost? Calculate what your rent costs as a 21-year-old kid and go buy something that's the same. You have to do it. And in 8 years from now, when you go to move, can you keep that property? You might be able to. And now you're accumulating assets that are worth something. If you don't do that now, you're never going to do it. You get yourself in a situation where you're now 32 years old and then you didn't do it 12 years ago or 10 years ago. And you're like, man, I kick myself all the time for 2003, 4, 5, probably 2006, 7, 8. 2006, 7, 8, I should have bought 4 single-family split-level homes, and I didn't because I was like, what's going to happen?
Right.
But those babies were 130 to 180 that were in rough shape. That needed some carpet and paint and a little bit of landscaping work done to them, and those things are now $380,000 easy. So you'd have yourself $1.5 million worth of real estate if you look back. Point being, if you're at early 20, women are doing it.
Yes, they are.
Okay, women are smarter than men in this way. They will go and buy if they have a job they're going to live somewhere, and they're recognizing themselves. And I think women are more nesters than men are.
Yes, no question.
But they're doing it, and young boys, your young men should be doing it too.
Well, here's the other thing.
Just go buy yourself a crappy little townhouse.
Yes.
And get into it skinny, and put more money down on your mortgage every month,
and get it
and accumulate some wealth that way.
I've got 3 minutes. I got a lot to go
Sorry.
through. So give me trajectory of the market, right? So the idea that the market's going to correct. It's not sustainable, the levels that
it's very possible, in my opinion. It's very possible. To what extent, nobody knows. But I think it's very possible. And me for the last couple of years, I'm like, I see it flattening. I'm putting houses on the market for less than what they could have sold for at a peak in certain price points.
Mhm.
I see very little activity on townhouses, you know, and when townhouse sales
That's
slow,
the first one to turn.
there's an impact of market time right now, being that it's October, November. Sure, you'll have your seasonal adjustments, but I mean, I certainly have seen it for the last couple of years as interest rates peak and drop back down and things settle out now in the sixes. It's certainly a possibility.
Yeah.
I think a market correction is going to be driven by something outside of real estate. So, for example, your interest rates.
Yep.
You know, if your interest rate suddenly came down 2 points, there would be no conversation about a real estate market correction.
Right.
Yeah.
But the
I
market
agree.
doesn't dictate that right now. So I think
Right.
you know, the trajectory is
Sideways.
interest rates have been trending down, and value appreciation has been trending down.
Mm-hmm.
At some point, there's a flattening, and then does it continue to dip? Like, do we go through that floor, and
I
then
know.
things get worse in terms of the appreciation? And it's a very possible scenario.
Yep.
Well, is it going to happen, and to what extent? I don't have the answer to that, but certainly that's been the trend. I mean, that's been the market trend.
So good conversation. Always fun to have that conversation with the young people. So I thought we'd share it here. Closed-end seconds. Did a couple of those this past week.
Closed-end seconds.
So basically it's on a term, 20-year or 30-year term. But
Okay.
it's a second mortgage. So they can hold on to their 3 or 4%. They have nice equity. They need to get rid of credit card debt. And
Now, how's that different than a line of credit?
Line of credit is you just pay interest. This is principal and interest.
All right.
And the line of credit is variable. This is fixed. But
Okay.
it's fixed at 10%.
Yeah.
Like, oof, that was tough.
That was tough.
That's because we went up quite a bit in the loan
Closed-end
value,
seconds
so-
fixed at 10%.
Yeah, 10%.
Better than
but
28% on a
Yeah,
credit card
yeah,
if that's
yeah.
what you're doing.
We paid
Yeah.
off $76,000 of credit card debt.
Yeah.
So they're like, hey, 18% savings. Love it.
Yeah.
And it's deductible
100%.
interest. I'm like, okay.
Yeah.
You know, I'll send
Yeah.
you the docs real
Yeah.
quick.
Yeah.
So,
Yeah, here's the new payment, and you're actually working on the debt.
yeah.
Yes.
So that was good. Beat one of the big builders this week as well. So it's
Let's
always
go.
fun to
Good
beat a
job.
builder. They don't always put all the fees in there, just
Mhm.
FYI.
On their marketing
on
literature.
their stuff,
Mhm.
right? So when you get it and you're able to peel it back, I said, hey, if they beat me, I'll tell you, because quite honestly, sometimes they do,
Right.
but this one they didn't. So it's pretty fun to have
Good
a
job.
win there. So anyway, Kelvin Kamick, Loan Depot, love to have a conversation with you regarding your money, your mortgage, and just help you make smarter decisions regarding it.
651-231-2500 to get in touch with Calvin. This is Real Estate Chalk Talk. Log on to our website, hittnergroup.com, HITTNER group.com, or 612-627-8000, and we'll see you again next week.
You've been listening to Your Real Estate